In today's energy markets, I want to focus on WTI crude. WTI crude finding a bounce today. It's rallying here after 2 days of selling pressure. We are seeing WTI up on the day, right around the 53.40 level, so up about 1.2% for the day. I can tell you when you look at the price action, we did see some moderation earlier in the day as WTI was holding below that 53 handle, but we did see some strength throughout the day, and some of the items coming into play here I think are the narratives coming out of the China-U.S. trade situation. We're seeing the market give up some ground to the equity markets, that is, but ultimately not too much ground, so it does feel like there's a little bit of optimism underneath this market that they're still going to continue with the progression of those negotiations. Also, we're seeing, again, some of the numbers coming out today a little weaker than expected, but ultimately it does appear that WTI has found a range here, at least for the time being, while it's waiting for some numbers. And we get the API number this afternoon. It's a day late this week because of the holiday, so that will be a number going into tomorrow's price action. I believe that the market's going to be very focused on. Expecting a small build right around the 2.7 million barrel build after last week's build. We have seen consecutive builds, so I think, again, any variation outside of that 2.7 expectation will create some volatility within the WTI space, excuse me. And also I think that let's go back into the, since we're talking about the inventories, let's get into the production. And really that is the themes, I think, the big theme underneath this market. We continue to see the concept that going into this OPEC meeting later this year is there's still too much production relative to demand. And to this point, it does appear that the market is a bit concerned about that as we see some of the major agencies across the globe coming out with, again, lowering their demand forecast for 2020. When I'm talking about the IEA, the EIA, and those are two separate, IEA and EIA, as well as OPEC. They're all lowering their demand forecast, and that's weighing on the WTI space. So I think, again, the market's trying to adjust for that, and the expectations are that OPEC and OPEC Plus are going to have to cut productions even further as we go into 2020 to maintain this current price level. Also, the trends within the marketplace, I want to focus on that. We move into some of these numbers throughout the week. And we're still seeing WTI moderate here and building what appears to be at least a temporary base around the 52.5 to 53.5 level. Again, some consolidation here for the last couple of weeks, holding above the lows that we saw early in the summer. So from a technical standpoint, that's a positive, but ultimately unable to, at this point, to escape above this current kind of range. We did see a little bit of a breakout last week around the $55 a barrel mark, but then some selling pressure came right back into the market. So it is going to be very interesting to see as these numbers come out over the next 2 days. API today, EIA inventory numbers tomorrow, if the market's going to be able to, again, find the catalyst here to maybe push above this range that it's currently trading in, or a breach below 52.5, a close below 52.5 would again flip the script a little bit more to the momentum on the downside and possibly push us back to challenge those lows that we saw earlier this summer.